in here. And we are going to talk about the state of stock giving in 2023. This is, we'll share more in a second, but we did a ton of research, even more so than usual. Looked at thousands and thousands of nonprofit 990 data. And so we're quite tired over here. We did a lot of homework to make this possible, and I'm really excited to share this with you. So a couple of things before we dive in. Quick note, this is CFRE approved. So for those of you that are getting your certification here or continuing to do so, at the end of the session, we're going to drop in a link to a survey. You fill that out, we certify your participation. So pretty simple, pretty excited for that. Here's a quick agenda. I won't read it all out loud. Important thing to know is that the recording and the slides will be sent around later today. It's still the case that someone's going to ask this in 20 minutes, but yes, that will be a really big deal. All right. So quick intros here before we go even further. My name is Patrick. I've gotten to meet a lot of you virtually, a lot of you in person, which has been so lovely. I am down with some of you in extremely sweltering South Florida in the great city of Miami right now. I'm also the co-founder of Freewill alongside my wonderful co-founder Jenny, who's all the way on the other side of the country up in beautiful Seattle right now. And we get to work alongside about 200 folks who have raised $8 billion to date, smart, tenacious, kind, lovely people. We also get to work alongside many of you, almost 1,300 nonprofit partners, including many folks on this call. So if that's you, thank you so much. We love supporting you. And let's dive in. One thing we really like to do here, because we're just grateful that you're here, is give away some of my favorite books. And this week, we're going to share a book that I have just started. So I'm a couple chapters in. It's very good. And it's called The History of Money. It's by a guy named Jack Weatherford. We'll send 20 of these. This will be, again, in the survey at the end, we'll have you drop your address and name there, and we'll select a bunch of folks. A really interesting book. Our work as fundraisers is entirely centered around the idea of money and how people feel about money and spend money and give money and earn money and invest money. And this wasn't always true, right? We didn't always have money. It's evolved in different ways in different cultures. It's sort of come into modern existence. Fascinating read, very readable, right? So it's not an econ textbook. It's just really interesting. If you get a chance, hopefully we can send you one. And if not, you can always get it at your favorite local bookstore. Okay, a couple other things before we get started. We asked you how your week is going. Generally pretty good. People are feeling happy. They're feeling excited. Not a lot of anxiety, not a lot of loneliness. It is summer in all of America. In some places, it's a little too much summer, like in the Southwest, but generally people are doing well, feeling good. That's just great to see. So hope you're having a great week this week. On the less positive side here, we ask people every week how you're feeling about hitting goals, and we're not doing as well as we were a couple months ago. So you can see lowest of the calendar year in terms of people feeling like they're hitting their goals. If anyone wants to share why, I know that we wrapped up Q2 since we last spoke. A lot of you had your end of fiscal year, so we'll see. A lot of you also saw the Giving USA report, which showed that giving was down in 2022. It's rare for giving to go down, and it was down a bunch. Even more when it looks inflation adjusted, and inflation is really kicking into hurting some people hit goals, but we'll talk more about how to hit some goals today. We also asked you about stock giving, which we're about to get into. And we said, okay, on a scale of 1 to 5, how important is it, right? And the average is a 3. So for a bunch of folks, and these are probably some of the larger organizations, it's super important, right? And you see that in the 5s and the 4s. Then you get to smaller organizations, tends to be less important. Now, part of that is the reason the small organizations stay small is they're not doing enough of this. But we'll talk about some really easy wins for stock giving in a moment. And then before we get in, I just want to give you a little bit of the sort of background on the report that we did. So we conducted an analysis of more than 13,000 nonprofits. These tend to be the largest, right? Many of you know there are 1.5 million nonprofits in the United States. Most of those nonprofits have 0 employees, right? So we talk about real organizations, not real, they're all real, but organizations with more than 100,000, 1 million, 10 million in revenue, those numbers get a lot smaller. We looked at some of the top 13,000 nonprofits, and we looked at this not just from 1 year, but from 2018, 2019, 2020, and 2021, capturing all the data from basically middle of 2017 through 2021. Why not 2022? a lot of those filings are still coming in, right? So you get really incomplete data. And so that's why we ended the analysis in 2021. We looked at a whole bunch of trends sector-wide across the entire industry at specific organizations to really try to glean what is happening in the world of stock giving from organizations like yours, and what's in between success and failure, right? Why are some organizations doing better than others? And we also surveyed many of you to sort of get a better understanding of how you're behaving, what you're doing, what's working, what isn't doing. We'll also look at how donor advised funds play a role in all this and how the rise of donor advised funds has affected stock giving. So a lot of interesting stuff. As I said earlier, we'll send the slides around after, but hopefully you'll leave here a bit smarter than when you came in. And hopefully we'll have some fun for the next 50 minutes or so. So first things first, let's look at the stock market. And maybe before we do, I hope everyone knows what stock is, but just a real basic definition here. Stock is a right of ownership in a company, right? So if you own 5 shares of McDonald's stock, you don't feel like I own the McDonald's Corporation, but actually you do, right? And if you own 50,000, you might own more. And if you own 50 million, you might be a minority or majority shareholder. And so it is a traded commodity that people can move back and forth. Each share of stock, for the most part, is identical to other shares of stock. So it's not exactly important which share you own of a company of not, right? And why do people buy stock? Mostly because they believe over time it will go up, which is generally true. In aggregate, right? Not any particular stock, but in aggregate, stock market has gone up pretty quickly over the course of the last 100 years. So when we started this year, and some of you might have come to sessions like, how do you think about fundraising in a recession? We started the year thinking a lot about inflation and a possible recession, but it hasn't quite been true, right? There's a lot of negative news, but employment and corporate earnings remain strong. The NASDAQ is up 31%. I mean, this is an incredible year for tech stocks. S&P up 15%, have both seen an increase year to date. And despite these trends, economists are cautious about what the end of the rest of the year brings. But I want to remind people, you cannot predict the stock market. I cannot predict the stock market. And actually, most of these analysts are not doing much better than a flip of a coin, right? So markets tend to be extremely difficult to predict. And if they weren't, right, we'd all be in different jobs, right? So this is really important. There's no sort of certainty around what the next 6 months bring. But we do have certainty around what the first 6 months of the year brought. And 30% and 15% over a 6-month period is actually outstanding performance, right? It doesn't feel that way based on the news, but really sort of top tier. When we look at the last 5 years, and this backdrop is important, right? Because we don't want to overly focus on the moment. The last 5 years, there's some different stories over the years. And then when we look at what stock giving did during those years, that will be important as well. So 2018, maybe we can sort of put our little minds on 2018, second year of the Trump presidency. Don't know who was top of the charts, pre-pandemic, right? Pre a bunch of other technology. It's a simpler world here. Dow Jones and S&P both fell by about 6%, right? So 2018, a little bit of a down year. 2019, strong recovery. Dow up 24%, S&P up 30%. 2020, remember, many of you remember March, April, boom, like real hard crash, and then right back up. So over the course of 2020, despite the beginning of COVID-19, Dow Jones increased by 7%, S&P by 16%. And then 2021, S&P up 27%, Dow up 19%. Sorry, that's in there twice, not sure why. But just sort of general sense of, it's mostly been good years, with 2018 being a bit of a down year over the past 4 years. Generally, stocks tend to outperform bonds and most other investments, and more people are invested broadly, right? And very quickly, not everyone knows the difference between the Dow Jones and the S&P and what they are. And since we'll talk about these a bunch, maybe it's worth reviewing quickly. So the Dow Jones and S&P 500 are both what we call indices, right? You've heard of an index fund. They're a fund of indexes. These are both indexes. They measure a series of companies in aggregate to talk about whether the market is going up and down, not any individual company. Now, obviously, huge performance by one company can drive that in one direction or another, but generally look at the aggregate. So Dow Jones tends to be, Dow Jones is a sort of shorthand for Dow Jones Industrial Average. And that's about 30 companies, I think, tend to be much larger, tend to be a little bit less tech heavy. S&P 500 companies, a little bit more tech heavy generally. So that's a little bit about that. When we look at something like the S&P 500, you can see this over the last 5 years and up 60% in aggregate, right? So if you put $10,000 in 2018, you'd have some ups and downs, but now you have $16,000, pretty good 5 years for no active work. If you look at, over time, it's grown thousands of percent since the 60s and 70s. So generally good practice. None of this is financial advice. Now, why does it keep going up, right? So basically, stocks go up when more people want to buy them. Stocks go down when fewer people want to buy them, right? Pretty simple. What we see is that across the board, stock ownership continues to expand. So 61% of Americans own stock. It's the highest level since 2008. But remember, the population is a lot bigger than it was in 2008. So this is more people in the United States. Also true that globally, right, a lot of folks outside the US own money in the US stock market or own stocks in the US stock market. Ownership hasn't declined when we look at ownership over time since 2016 and 2018 to 2020, pretty static ownership levels. And then it's gone up pretty quickly over the last 3 years. Now, why is this? Well, a lot of it's demographics, right? So more married people own stock compared to unmarried people. More women own stock than men, but it's pretty close. Higher income Americans, right? If these are your donors, we're thinking about stock ownership here. 84% of folks making more than $100,000 a year own stock. That's a lot, right? So if you think my big donors are all making more than 100K, that's it. But even folks making between 40 and 100 a year, 63% of those own stock. So that's another big component. And then 80% of college graduates own stock. So just take a look at this for a moment. If I think my donor base skews a little bit female, tends to be more married, tends to be mostly college educated, to be higher income, this is a really good sign that we should be investing in stock giving. Now, you might say, my donor base is entirely 25-year-olds, unmarried, never went to college. Probably not, right? But think about for a moment where your donors live and whether they live in this bracket. There's also a common misperception that a lot of people have when we talk to them. They say, okay, well, that's for older donors. And that's actually not true. This big rise in ownership is largely driven by millennials and older Gen Z folks, right? So we look at 18 to 29, which is not a perfect encapsulation of generation. It's both millennials and Gen Z. Well, 41% of those folks already own stocks. All right, keep in mind that boomers still own a lot of the wealth in the United States. So it's not, who owns stock is not the same as who owns how much stock, and boomers still own the most wealth. But that's where it is, right? So then we look at the older folks, right? Older young folks, that we might want to call it. So elder millennials like me and Gen X from 30 to 50. Well, 2/3 of those folks own stock. A little bit less actually between 50 and 64. And then 63% of folks over 65 own stock. Now, why do more millennials and Gen X own stock than silent generation and boomers? Well, a couple of reasons, right? The folks that are owning stock among the boomers probably have more of it than these younger generations. But remember, this is really heavily influenced by college education, right? 80% of college graduates. And now some of you have seen in some of the generational studies we do that college attendance went up dramatically from silent generation through boomers into millennials, right? So 10% of silent generation folks-ish went to college, 25% of boomers have a bachelor's degree, 40% of millennials have a bachelor's degree. So super important. Alex makes a really good point in the chat that things like Robinhood, Wealthsimple, Wealth Engine, I think it's called Wealth Engine, Wealthfront rather, Schwab Online make it much easier to sign up than it used to be, right? You don't have to go to Main Street and talk to a guy who's trying to sort of pitch you a bond portfolio. You can just sign up online without ever talking to folks. All right, so how does this relate to our giving report? Because that's interesting, but we're here to help charities raise money. That understanding these wealth patterns and who has stock and who doesn't can often paint a picture of where the future is headed, right? So we see that younger folks are owning more stock ownership. They're not going to give that up as they get older. So now we know that over time, stock ownership is increasing, right? We also know that boomers with all of this wealth, including all of this stock wealth, is going to pass on a considerable amount of mutual funds and stock to millennials and the great wealth transfer. Part of the reason that that planned giving is so important now. And we know that also this is really important, right? So if you are in what we call your spend down years, so if you're 70, you've accumulated all this wealth, and so much of that wealth is in stocks, well, now we're going to start to liquidate that as we get older and cover things like healthcare costs and housing costs, because we may not be working anymore. And so you're going to start to see some shifts there. And so folks that especially in their older group, when you have these assets that have appreciated for 30 years, these tend to be great, really great donation vehicles. We'll talk about that in a second. Insights from our giving report. So I want to share this with you, and then we're going to talk about what to do about it. So some really interesting things to see. When we look from 2018 into 2021, over the span of all that time, we actually see that fewer nonprofits are receiving stock gifts. So fewer nonprofits are actively soliciting them. And this remains true across a bunch of our top performing states, which we'll show you in a moment. We also a decrease in the quantity of gifts by some of the sectors from 2020, right? So over 2020 to 2021. Arts and culture saw an increase. So that big news, arts and culture really went up from 2020. You might have thought like people are back in 2021 really doing it. So there's a big stock increase for arts and culture. Faith-based organizations saw a modest increase. But the flip side of that, right? A little bit fewer nonprofits are getting these gifts, but the total amount being raised is actually much higher. So 18% fewer nonprofits reported receiving stock gifts from 21 to 18. But those receiving gifts have received a greater number, 43% more. So you're seeing more and more organizations be wildly successful and leaving the other ones in the dust. The combined value of this gifts is higher, 12% up from 2018, and about a $1.3 billion increase from 2018. So there's a lot of money happening here. A 3.6% billion increase from 2020. So really big gifts. These are 2021 numbers that we're talking about. So that's some really interesting stuff, right? We're seeing a couple nonprofits sort of skip out on it, but the nonprofits that are staying with it doing better than ever. And it's really driving serious revenue gains for those organizations. Now, another thing that's interesting is we said, okay, I spoke to you earlier, 2018 is a down year, 2019 is an up year, 2020 is an up year, 21 is an up year. What does that mean for stock giving? Stock giving doesn't follow exactly the same pattern here. So we saw big growth in those years, and stock giving dipped in 2019, and then in 2020, and then back up in 21. So what you see here is that it's not perfectly correlated. Now, sometimes I see, okay, some bad news in the stock market, suddenly people don't want to ask about stock gifts anymore, and that's a mistake that some people make, right? That's a mistake that's leading you to lose gifts and not get some of these enormous donations. And coming back to, you can scroll up to Amy's point earlier about moving that donor from $1,000 to $15,000 stock gift. So much of that is shifting the way that people give is what drives these bigger gifts more than anything else. There was just a question here about DAFs. It's really interesting. So when we talk about this report, we are talking about stock giving directly into traditional nonprofits like yours. But we've also talked about in the past, for those of you that have been with us in previous sessions, about this enormous rise in donor advised funds, right? There's $230 billion sitting in donor advised funds right now. And so why is that? Well, there's a big amount of stock donations who are donating stock, but to traditional nonprofits. Sorry, not to traditional nonprofits. And in fact, stock giving to donor advised funds outpaces stock giving to all other traditional nonprofits combined in these years. And in 2021, $11 billion more went to donor advised funds in stock gifts than all of us combined. $13.4 billion was given to nonprofits, and to donor advised funds, $25 billion in stock gifts, right? Both of these numbers might be a little conservative. This is just public equities, right? So it doesn't count privately held stock and things like that. So huge shifts here. What does it mean is the donors are actually giving more and more and more stock, but a lot of it's going through donor advised funds first. We'll talk more about this in a second. But we talk so much about the rise of donor advised funds, and so much of it is because they are really, really good at soliciting non-cash gifts. And when you talk to the folks at Schwab Charitable or Fidelity Charitable, they'll tell you that 2/3 of what they receive is not cash. So really, really big shifts here. Closer look at some donor advised funds to give you a sense here. We don't have filings yet from 2021 on Schwab, I think. Let me see if I can reload this and get those in there. There we go. We always make last minute edits with sort of latest information here. So we look at Fidelity, for instance, and you see over 2018, 5.5 to 4.3 to 6 to 8.7. So in a couple of years, they're going up like 30 to 40% in terms of stock gifts. Schwab Charitable, 2.3 in 2018, all the way up to 4.1. I mean, imagine if your organization had basically doubled their stock giving in this short amount of time, right? So really interesting stuff here about how good donor advised funds are getting at soliciting these gifts. And we'll talk more in a moment about what that means for us. So really, really interesting. So in Insight 5 is higher ed. So big colleges receive the most stock donations, but other sectors show promise as well. Environmental organizations, some of them have been tremendously successful, right? Huge increase since 2020. And there's a lot of opportunity here for a lot of folks, but there's untapped opportunity. So just take a look at this. When we look at 2018 to 2021, some of the biggest recipients of stock donations, well, higher ed is the top, right? Now, remember that college graduates give the most stock. Well, who graduated college the most? The people that went to the colleges, right? So if you're Yale, you definitionally are raising money from college grads in a way that other folks, may have a lot of those. But if you have folks that went to these schools, and I'm not talking about just the Yales and Stanfords and Dukes of the world, right? Any of them, and they're getting in the habit of giving stocks to their alma mater, it's a really good opportunity for you to make use of that and say, okay, you can also give stock to us. So higher ed, human services, right? Arts and culture. Higher ed also tends to have the most sophisticated giving teams that I've seen for the most part, with a couple of exceptions from national nonprofits. But also look at this, things like K through 12 is getting $3 billion, right? Religious organizations, $3 billion. Now I want to say something here. Many of you know this, but a lot of churches and houses of worship aren't required to file 990s. So there is likely a lot of stock giving to houses of worship that is not reflected here, because the reporting requirements are different for houses of worship compared to something like the Nature Conservancy. So just going to lay that out there. We are probably understating the level of religious giving here, because so much of it goes into sort of unfiled organizations. Healthcare. When we look at the top 20, again, no surprise here. Yale, Harvard, Stanford, and then Michael J. Fox tops the non-university list. Kalamazoo Foundation for Excellence, huge community foundation. A lot of that's coming from one dude. University of Notre Dame, medical research, the Nature Conservancy, one of the largest among sort of big national nonprofits. So really exciting stuff there as well. The rest of the list, again, you see a lot of colleges showing up here, some health research as well. So pretty interesting to see across the board. When we look at performing states, right, this is not donor states. This is where nonprofits are centered, right? Because we're looking at the filings of the nonprofits, not the donors. California, the biggest, right? Stanford was high up there, but a lot of stock wealth in California. If you have California donors, right, a lot of IPOs have been from California-based companies over the last 10, 20, 30 years. If you have California donors, this is a must do, right? You have to be looking at stock giving. Not only are the folks who sort of were early investors and other things that are now holding public stock, a lot of employees are compensated in stock, including at companies that are already public. So if you have folks that work at Salesforce or Google or Facebook or Netflix, really good opportunity to engage those younger donors in stock giving, right? What else is on the list? No surprise here, New York, a lot of colleges and a lot of national institutions, Massachusetts, DC, Pennsylvania, Florida, et cetera, right? Texas, Illinois. So a little bit more coastal. This is not to say that non-coastal donors aren't giving stock. It's just that a lot of your oldest and largest institutions in the United States are based on the East Coast, right? So that's basically what we see here. All right, so that's a little bit of the overview and some of the research. And by the way, in about a week and a half, 2 weeks, we're wrapping it up now, but we'll share the full report with everybody. And so you make sure you fill out that survey at the end, and that way we'll have your name to send it to you. All right, so how do we, now that we know, okay, gifts are still a big deal, that some organizations are really doing way better than others, how do we enter the sphere of those organizations that are getting these really big gifts, right? So a couple of tips, some of these are not that complicated, but still worth reminding you. You should be asking all of your donors for stock gifts. Do not restrict these to your older donors. We just showed you that Gen X, even little baby Gen Zs and millennials are all increasingly holding a greater share of stock. And this will continue for two reasons. One is these folks get older, they earn more, they buy more stock. And two is they're inheriting a ton of assets from their parents and grandparents in the baby boomer and silent generation, right? There's so much wealth concentrated in those older populations, and over the next 5-10 years, this will start to pass on. Similarly, you might be restricting your potentials only if you target your major donors. Stock ownership is much broader than we give it credit for. And so it's a mistake to not think about this more broadly, right? And you've heard me say this, but it's probably the most important research in modern fundraising. Our friend, Dr. Russell James, ran an analysis of organizations that took stock versus didn't over a 5-year period. And the folks that accepted appreciated assets, which is fancy ways of saying stocks and bonds and mutual funds, grew by 2/3 over a 5-year period. The organizations that did not grew by 11%, right? So there's really two pathways here for your organizations, and we would beseech you to really think intelligently about accepting non-cash gifts, right? Average gift size of these organizations increases by 26% in their first year of focusing on non-cash gifts across the board, right? So this is sort of a clearer path to hitting your goals as there exists in the modern research. Tip 2, a little bit different. We're seeing a huge shift from major gifts happening offline to them happening online. So when you think about making more of these gifts, using things like QR codes for your direct mail, your newsletters, your brochures, your handouts, super important, particularly true for millennials and Gen Z. Gen X and boomers are very comfortable with these right now, right? Millennials and Gen Z rely heavily on this, and it's going to feel more native to them and signal that, oh, this is for me as well, and not just for my parents and grandparents. This enables quick and easy stock donations. It taps into convenience, and it's not limited to younger donors, as I just mentioned, right? So widespread use. You know, I remember having conversations 5 years ago, pre-pandemic, where, you know, the big question was like, why do QR codes even exist? Nobody uses them. And now they're near universal, right? So this is one of the minor technologies that has really exploded over the last 4 years. Tip 2 here, continuing here, this can be in social media posts, downloadable content, etc. If you're at an event, this is a really good avenue, right? So if you're at an event getting donations, really important, right? You can give folks this on flyers, on table numbers, etc. And at the event, people can donate stock instead of cash. And you guessed it, they'll be giving much more. So this tends to be really, really important. We've seen some galas bring in tons of money when they accept non-cash gifts on top of your normal cash stuff. Here's an example from our friends over at Amfar. So bless you, Karen and team over there. Now here, look, this is really interesting, right? So this is a handout they give to donors, and it talks about tax smart ways to support Amfar, right? And most of you know this, but cash is often the worst way to give. So we have stocks, we have QCDs, we have cryptocurrency, et cetera. When we zoom in on stocks, for instance, here's what it says. It says donors like you often find they can make a larger impact at less cost, right? It's a win-win. It allows you to avoid paying capital gains taxes and receive a full tax deduction, et cetera. And then we'll use the full value of the gift to fund our important HIV cure research project. So you can see how compelling this is for a donor who may not have thought about this. And we know that most donors haven't. When you donate stock, please use this tool so we can track your gift, et cetera, right? Really smart stuff by Amfar. So that's tip 2, right? It should be everywhere. Tip 3, as I mentioned earlier, do not get fooled by bad news on CNN, right? Right now, the market is up. You should be asking for stock gifts. When the market is down, you should still be asking for stock gifts. Here's what happens, right? There'll be a headline that says, S&P down 23% off of January peak. And what they mean is that for a half second on January 14th, right, stocks were at X, and now they're down 19% from X. But go talk to your donors. Hey, did you buy all your stocks at X, and are they all down 19%? No, not at all, right? So most of your donors, virtually all of your donors who've held stock for more than a few years, which is certainly going to be all your older donors and most of your millennial and Gen X donors, all of them will have appreciated stock. Almost all of them will. And so at any moment you can get stock gifts. Now remember, they might say, oh, I don't want to sell it. I think it might go up. Well, what you could say is you can give us the stock, you can buy it right back. And you've wiped out all the capital gains that you would have to pay. So really, really important. Tip 4, must do. For your team, your gift officers, right? You need to know the very basics of why giving stock is so good for folks, right? Most people who own stock do not think of themselves as a philanthropic expert. Don't assume that putting the option out there alone is going to have a successful program. Most Americans feel like they could use more in education when it comes to investing. And stocks are a win-win for you and your donors, right? If we have one-on-one conversations, we want to talk about this lets you maximize the contribution to your mission. It avoids capital gain tax. It claims the entire amount in most cases as a deduction. What does most cases mean? It means when you've held the stock for more than a year, which is where most of your appreciated stock is going to be anyway. And you avoid the surtax on investment income, which got tacked on during the Obama years as well, right? So win, 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 win. More money for you for the impact, more tax savings for the donor. They're feeling smarter, you're feeling smarter. Tip 5, we always suggest, and we mentioned this a few times, but we'll have it in here so you keep using it, including this magic sentence in all of your outreach. Will you chip in today to support X, right? No, many people choose to give from their assets, stocks, gifts of cryptocurrency, IRA, donor advised funds to see even larger savings, right? So you add this to your normal fundraising emails. Now, why do we add this? Oops. We add it because it does a couple of things, right? The first is, hey, we're going to get more of these stock gifts, which, as you've already heard, are often $15,000 or $20,000 from a donor who would normally give 5 or 10% of that. So that's a huge win, huge win. But the second thing is that the research shows that reminding people of their assets, right, especially in a time of inflation or other stress, reminding people of their assets and their savings, their investment, makes them feel wealthier and gives significantly more. So your cash gifts are going to be bigger when you put the sentence in, and you're going to get more of these non-cash gifts. So win-win, really, really important. Bonus tips here. We talked earlier about donor advised funds. Donor advised funds, as we mentioned, are doing a much better job than many of you, sorry to say, at soliciting stock gifts. And so know that some of your donors who have previously given stock to you or elsewhere are now going to give them through a DAF. So you have to be asking for DAF gifts. But also the folks who are giving you DAF gifts, many of them are giving stock directly to that donor advised fund. And if they knew that it could be as easy to give stock to you as to your DAF, they would give it directly to you. Now, why does this matter? You might say, through the DAF, to me, it doesn't matter. Well, remember that donor advised funds, while great, while big, are only giving out 25% or 20% of what's in there every year. So that money may come to you, or it may come elsewhere 3, 4, 5, 6 years down the road. And so getting these gifts now is obviously a huge benefit to hitting your goals. And, time sort of kills all, there's a saying in sales, time kills all deals, right? Time kills all gifts if you wait and wait and wait and said, oh, maybe I'll get this down the road. So being able to give directly to you is a really important point. Bottom line, you want to remind people when you're talking about DAFs, they can also give you stock. When you're talking about stock, that they can also give from your donor advised fund, right? You want to make sure that we're highlighting these, so we're meeting donors where they are and getting these really, really large gifts. Okay, so that is what we have to cover on stock giving. And now we're going to switch gears in totality and show you something that we've been working on really hard that is really fun, and I'm excited to share with you. So, well, actually, it's not this. This is a book that we did not write. First, as a reminder, we're going to give this book away to 20 people by Jack Weatherford. My colleague Phoebe, who's awesome and put a ton of work into this, just dropped the survey in the chat. So it should be the last link in the chat right now. Just pause some of the chats for a second so everyone can click on that. If you don't mind, click on that right now. It is where you'll find the book. It is also where we can get a ton of great feedback from you. It takes you about 45 seconds. So please do that for us now. But I also want to show you something that we've been working on really hard. And it is a totally free tool that as of today, basically, we are making available to the entire nonprofit landscape. And what it is it's called Willy, which is a sort of a fun name. And it's a writing buddy for you powered by artificial intelligence. So it can write first drafts of highly personalized things like fundraising emails, social media posts, press releases, thank you notes. It can even create a year-long fundraising plan or a year-long social media plan. Soon it will be able to create memos for your boss and your board about certain types of fundraising. And now I'm going to show it to you. So we've been working really hard on this. After the session, we will send a link to you to the tool so you can check it out, play with it on your own. We would love to have your feedback. This is, oops, I'm going to show it to you now, and we're generally pretty excited. By the way, it's a beta, and beta is just a fancy word that tech people use for it is a work in progress. So if you find typos or bugs or things you think that can be improved upon, let us know. We would love to hear about it. We want your feedback. So this is Willy. What can it help you with? As I mentioned earlier, fundraising emails, thank you notes. It can write your direct mail. It can evaluate a fundraising email you've already written. Soon we'll have planned giving emails, sample email calendars, social media calendars, press releases, event invites, social media posts, all these things. Now, it's not writing generic stuff. It's using your own website and the tone and values and language you use in order to do this. What's the best way to use it? It should be a first draft. So very important, do not send this stuff out without fact checking it. Many of you have heard important stuff. Is my content going to be the same as everybody else's? Nope. It's really highly tailored to your organization. Is there a limit to how much you can use it? Nope. As long as it doesn't get super expensive for us, it's free. What does it cost? It's free, just in case we're saying it again. Big question people ask, I'm a Freewill partner. Does this replace my beloved custom content? Nope. Our content team is amazing. They're hard at work. But there are things like random social media posts about stuff that we have nothing to do with that we can't help you with. And so this is designed to do it. And then how long does it take to use the tool? Sometimes it can take up to a minute or two to generate stuff, although it's getting faster as we're working on it. So let me show you what this looks like. So we're here and you can see different options, and we're going to write a thank you note today. And I've typed in some of the prompts beforehand just to save us time, so I don't get, you don't see all the mistypes I make. And so we're going to write a pretend thank you note. So let's say that Mary and Stephen Jones, let's say they're a married couple, have made a gift to our organization, which in this world is the Michigan Humane Society. How long do we want it to be? Let's say 300 to 400 words. We want them to know that we really care about them. Is there anything you want to say about the donation? How much it was? We'll say Mary and Stephen are a married couple who've been giving for the last 10 years. They have 2 kids and a beautiful German Shepherd named Mozart. Their gift of $25,000 worth of Apple stock is going to help us spread the word about our adoption program to get another 200 or so stray animals adopted. Awesome stuff. MichiganHumane.org is our website. And then let's pretend that I'm the gift officer here. And what tone do we want it to be? Also, is there anything else we want it to, any other instructions? And we don't have those for now. So we're going to hit submit. And we're going to watch it load. And so maybe this is going to take a second, maybe not. Oh, it's already doing it. So here we have a couple of suggested subject lines so that we can, that you can pick, right? We want to generate multiple ones. You can use your own judgment. Super exciting. So we'll give you 5. And we have a recommended one, right? So that's what our sort of engine recommends, but pick your own. I'm just going to read it for you. Dear Mary and Stephen, I hope this message finds you, your children, and your beloved German Shepherd Mozart in good health and high spirits. It's my pleasure to extend a heartfelt thank you from everyone here at the Michigan Humane Society. Your recent donation of 25,000 Apple stock is a testament to your immense kindness, and your enduring support over the last decade is nothing short of inspiring. Your generosity goes beyond the monetary value. Oops, looks like it's still loading here. It's a beacon of hope that shines brightly, encouraging other compassionate individuals to join in and make a difference just as you have. It's this collective action that helps propel our mission forward, transforming the lives of our furry friends in need, one animal at a time. The impact of your gift will be particularly significant for our adoption program. With your support, we'll be able to extend our reach, enhance our outreach, and connect more animals with loving families, et cetera, right? So that's it, right? And so we could do this again with set us a whole fundraising calendar for the year. Hey, write our next nonprofit fundraising email. You could try it 3 or 4 times to get different options, et cetera, write us a postcard, and so on and so forth. And what we do is we build in a lot of the best practices that we talk about here. So things like making sure we're asking for non-cash gifts alongside our cash gifts, things like that, right? So we put a lot of all of the things you've heard. It is free. Sonia says, how will it be free? It's free. I don't know what the answer to how will it be free, but it's free. So, oh, how long will it be free? This is going to be free indefinitely. So good question. So that's that. So we will send you a link in the follow-up email. Make sure to check your boxes, try it out, etc. Deirdre asks, how much will my letter resemble another nonprofits? Very little. It's not, many of you would have played, you remember Mad Libs? Anyone played Mad Libs in like long car rides before the internet? And you'd sort of fill in the blanks there. It's not Mad Libs, right? It's entirely sort of created whole cloth. Every time it's not going to feel like other ones. It's like if you had a, fancy writer who's doing the research on your tone and stuff like that. So yeah, anyway, that's that. So can't wait to share that with you. Other big things in our lives that we want to share. On Thursday, so in 2 days, at noon Eastern, again, we would love to have you for a much shorter version that is a demonstration of our Smart Giving Suite. So what's a Smart Giving Suite? It's a set of tools that helps you get more stock gifts, more donor advised fund gifts, more gifts out of people's IRAs, which are growing super quickly, and more cryptocurrency, which is still doing that as well. We'd love to have you there. Very chill, lots of fun, pretty short. But if you'd love to join, just make a small note in the survey, and we will we'll welcome you to that. We can all hang out together again in 2 days. And with that, we're going to do a little bit of questions, probably end a little bit early today. 1, please fill out the survey if you haven't already. 2, in 2 weeks from today, our next webinar is going to be more on AI. So we did a session a few months ago. People loved it. We learned a ton. The AI world has evolved incredibly in like 2.5 months. And so we're going to dive in here and talk about some real practical applications for fundraising this year, right? So we'll look a little bit at the distant future, but mostly say, okay, well, if you want to crush Giving Tuesday at end of year, what are some interesting applications you can use? So that will be that. Great. Wendy says she already registered for Thursday. Okay, so let's do some questions. And yeah, we'll go from here. So Deirdre says, did you collect data on race, ethnicity, and stock ownership? Deirdre, we did not. So the generational data I showed you is from Gallup polling and not our work. And so that's that. We do not have that. It may exist somewhere in the world, but I have not seen it. I'm going to mispronounce your name, but I think it's Signe, S-I-G-N-E, or Signe. Feel free to correct me here. Asks, how does the step-up cost basis affect the willingness of heirs to donate inherited stocks? Great question. So first, I'm going to explain what the step-up basis is for everybody. There is a weird quirk in tax law, which is to say that if a person has Apple stock that held for 20 years and has massively grown, well, they own capital gains on all that gain, right? That's how it works. If they pass away and hand those Apple stocks to their kid, that kid does not have to pay any capital gains as of the date of death, right? So basically the step up basis means now they only pay capital gains on growth after that person passed away. So it is the case that in the first 3 months, 6 months, 12 months of someone passing away, there may be fewer gains. And so the value of donating stock isn't quite as high when the appreciation is low. But as you can imagine, over the next 5 years, that stuff's going to continue to appreciate, and they're going to have a lot more stock than they ever had. And so in the immediate sense, there'll be some reduction in it. In the 2, 3, 4, 5 year period after someone passes away and passes that on to somebody else, we think it will continue to grow. So great question. Becky says, my treasurer said it was a pain in the neck and expensive for her to convert stock to cash. What are the best options? So for many people who have their own brokerage set up, it's not that expensive. And so you can do that. It's probably getting a bit easier with some of the online tools. Freewill does work with a bunch of partners and helps them liquidate stock when they need it. We also have a bunch of tools for organizations that don't need to liquidate stock. You could have someone go through a donor advised fund. It's just, you want to make sure that you can get the money. So good question. Whitney says, last year you did a 101 stock giving video that we could share with donors. Do you have an updated version reflecting the latest info? Whitney, I'm going to check with our team and we'll get back to you. That's a really good question. Yeah, great question. Rochelle asks, would Freewill be able to make a QR code for us to accept stock gifts? Rochelle, I think so. Shoot me an email and we can chat about that. But QR codes are very easy to make, for the record. You can do that across the board. Couple questions on Willy. Is Willy part of our existing partner research package? Lisa, Willy is free, so you can use it whether you're a partner or not. So no additional cost there. Thanks so much. Kim says, how do we access it? Kim, we're going to send you a code at the, we'll send it in the follow-up email. Why are we doing that instead of sharing it now? Because if 1,000 people do it at the same time, you might crash the site. So check that out. All right, so we do research on ethanol shares. A couple other questions, but maybe we can pause there. We'll give everyone a little bit of time back. A lot of other things to talk about, some of the more stuff on AI, tackle in 2 weeks. But want to say a huge thank you for joining. This stuff is super important, right? The sort of thinking about these different types of giving are so important because they tend to be the thing that drives the most giving and really drives success for individual gift officers, for teams, and for organizations. So glad you're here. I think you're doing a real service to the organizations you work for by being here, and hopefully a real service to your career as well. So just wanted to say thanks so much. I hope everyone's staying cool in the South and staying dry in the Northeast. I know there's a lot going on right now, but just want to say lovely to spend time with you all today. If you have any questions, shoot me an email. You can also find me on LinkedIn. I'm pretty easy to find, Patrick Schmitt at Freewill. But happy summer, everybody, and excited to chat to you on Thursday for most of you, and then for some of you in 2 weeks as well. So hope to see you soon, and take care.